I'm not saying they won't have custody of it, but I'm saying the availability of it.
Oh yeah, no, I get that, but that's the same thing with the stock. I wonder what they're going to use to value, like, because they know how many were supposed to be out there, but how many of them are or aren't lost. Like, how do you value that? You know, how are you going to figure that out? Because
Like
that's part of the
half
market cap.
See, that's the thing that's like, it's one of the things that's not, it is and it isn't priced in, right? This is why I was like really kind of like the few times we've talked about it this week, I've said like, look, what's the Coinbase Pro depth? Because most of them seem to be using that as their origination to acquire whatever spot that they need to get. The amount of if you go to any of the centralized exchanges, the amount that's available to buy is nowhere near the circulating supply. So there is a real potential for a supply shock situation where the price, like, it doesn't matter how many have been lost because so very few are available to trade that we're talking like 1% of what's available.
Yeah, but I think you'll see that a lot of that changing because you're going to see the adoption or you're going to see in order to have these ETFs, they have to have that in crypto, right? They have to have that in Bitcoin, right? So in the Bitcoin ETFs, they have to have that, whether they're borrowing it from somebody who has it and are paying them a fee for having ownership issue of, I'm not even trying to figure that out. But basically, you're going to see the institutions start to acquire those, kind of like you see the governments had acquired gold, right? They got stores and reserves, and where they get that, they got from people who were mining it originally and eventually consolidate it. And you will see that happen with the financial services and with the countries, right?
Well, sure, but
the United States already has a bunch of it, right?
But I mean, so Hill, can you pull up that Bitcoinerty website we've looked at a couple times while we're talking about this? Well, I'm not saying they won't have custody of it, but I'm saying the availability of it.
Oh yeah, no, I get that, but that's the same thing with the stock. Like, you could have a market value of IBM of X, but the float, the amount that's actually out trading under circulation, might only be like 10% of the company itself, right? So the rest of it is, like you mentioned, it's like valued based on what it's trading for,
right?
And then they take that into consideration for the enterprise value. But we saw how that works when you look at a company like Sam Bankman-Fried's, right? XTF that went to like not zero because they surprisingly, I think they had some private equity investments that actually bring them back up. But literally, like, once you have a run on it, when that 10% goes to zero, then the rest of the company went to zero too, right?
Yeah. Yeah, so this is for the people that are watching. What I'm saying about, so when I'm talking about supply shock, if you go down that depth chart and you hover over something next to one of those cliffs, it'll tell you like how much you're able to buy at a certain price point or able to sell at a certain price point. And this is Bitfinex, which is one of the like second to basically Binance and Coinbase in terms of volume. And if you buy, go to the top of that cliff on the right, on the red side. The top of that cliff there. What's what is it saying there? Because
425 can be bought for 18.8 million until price goes.
Yeah, so $18 million, and it goes to, what's the price point?
44.
44. Right.
44.40.
So you spend essentially $20 million, and you're going to raise the price of Bitcoin $1,000, which in the context of an ETF is a rounding error.
That's what I'm saying is you're going to have greater liquidity pools, though, because they're going to have more.
But there isn't.
Not right now. You don't see it right now. Well, believe me, as time goes on, they will find a way to make this.
But you can't. Like, there's only what's available is what's available. It's like you can't manufacture more Bitcoin.
I'm aware of that.
Yeah, I know you are. But I'm just like, where's that extra liquidity going to come from?
Whether it has to be, as I said, a so hypothecation agreement, margin. Have you heard of margin?
Of course.
Where you're trading on margin. That's the same thing. So they're when you sign an account application at some financial services firm and you sign a margin agreement, what you're doing is you're allowing that company, whether it's XYZ financial institution, to margin your stock. That means that they're letting you are giving them the ability to loan out your stock, your IBM, your XYZ company, and they are doing two things. They're giving you the ability to borrow against your own stock up to 50% or 75% or whatever number that, depending on the type of the security. But they're going to allow you. And so people think of that on their side. They're like, oh, that's sweet. I can actually buy more equity and I don't even have to come up with the money myself, right? But the flip side of that is that they can loan out 100% of your security to some other institution and collect a margin on that. They collect the interest on that. That's how these institutions make money. So that's the same thing. They're going to just say, okay, as an institution, we own this much. We'll loan this out to you. Right? So they don't own it.
And then the U is the ETF. So the ETF won't have custody of it and they won't own it, but they'll be able to say they do.
Right. They get to borrow against it, or they're going to have an agreement that says that this is ours for the time being, for some period of time.
It seems problematic.
Yeah, and it's worked for years.
Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.